Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at technical charts and try to understand what happened in the market during the day and also plan for a better trade for the upcoming day that's starting from February 22nd, Thursday, 2024. If you're not subscribed, please subscribe and share to your friends and colleagues. So we had a bull chat day, right? The day turned out to be a trap for the bulls, and it was a big shakeout day. Market closed negative. Let's try to this is a wrap up of things. We'll come back to this, but first the charts. We'll directly go into the charts. Plain charts. Look at the Nifty candle. It's bearish engulfing. It engulfs the previous candle completely, and it is therefore heavily bearish. More downfall can be expected, at least in the short term. And Banknifty, the candle is wide range, not engulfing, wide range, bearish candle, and it's a bull trap. It trapped the bulls by trying to move up and then closing below the high of the previous candle. Even this is also a bull trap. Try to move above the candle and then close, not just below the previous candle's high, but below the previous candle's low. Therefore it's engulfing. So let's try to see what does it like. So basically Nifty was trending up towards the top of the channel after having retraced some 4.5% and 2.5% in terms of small corrections in a very wide range rally of 32%. In fact, today it made a new all-time high at 22,248.6. So it's very close to the 2250. It's an all-time high that's made here, and that's when the trap came in. Probably it's a profit booking. Sometimes you call it a big shakeout that takes out the weak hands. That's what has happened, downside you have the 20 exponential moving average, 50, all that till the bottom of the channel. Long way to go, right? Another 1,000 points. Need 1,000 points till there we have very good supports, including a gap that can be found at just below the 22,000. And Banknifty, as we know, it was in a channel, blue channel that you see. It fallen down once, took support near the 200 exponential moving average, climbed back in the blue channel once again it went down, took the support of 200 exponential moving average once again, and thereby formed the W pattern, and it gave a confirmation of that breakout. Also, that's when profit booking came in. In fact, today it broke out of the consolidation. Previous two highs at 44,200. That was also cleared. And after doing that, it did this. It is at the very edge of this parallel channel also, and it's a confluence of that as well as 23.6 plus consolidation breakout zone. So very crucial zone. Probably some bit of profit booking might have come in, but it turned out to be trapping. But Banknifty had fallen less. It is a flattish close net to net because it moved up a lot. It went as high as 47,350. That's when it gave up all the gains, right? It gave up 350 points down. So net to net it closed flattish with only 75 points lost for the day. But Nifty lost bigger, and it lost 141. That's still less than 1%, 0.64%. So intraday price action, if you see, it was a range bound day in the Nifty until afternoon when it dropped down big time. And very volatile as well. It was range bound until 1:30 p.m. and then broke down. Banknifty was range bound, but did not break down that much. It was mostly contained in that range, but it's very volatile, up, down, and that each of that up and down is it's quite 600, 700 points of up move. So it is range bound. Also with Banknifty not losing much, but it was range bound, but it lost sharp in the afternoon today due to something sell-off that came in. So it was a clear shakeout day, and Let's just quickly see what the levels are saying. So the first resistance to take out would be 22,250 first, because that's the all-time high, and then you could look for levels towards 22,600, the top of the channel. You have the supports that's coming at 21,950. That's very close to 22,000. So 22,000 nearby is going to be a very good support. Then comes the 21,850, which is 20 exponential moving average that will come as support now. 50 exponential average support will come at 21,500, surrounding number as well. And then comes the 21,150, which is the previous swing low, and 21,000 comes very close by with a gap there also, and along with the 100 exponential moving average also the same zones. So 2950, 2900, 21,000 is going to be very good support, but it's quite far away. We don't have to worry about that for the next day. It's not going to fall that much. Moving on to the Bank Nifty, the first resistance will be 48,000 clearly, right? But before that, you have to clear the previous swing high that was made today. That's 47,350 has to be cleared, and if that is cleared, then 48,000 is a gap as well as a rounding number, and then the all-time high at another 600 points away, 48,636. Downside, the first support could come in at the yellow channel's top, the breakout zone at 46,350, and then the exponential moving average will come at 46,175. 46,163. That's where the 50 and the 100 exponential moving average are there. As well, then comes to 21,700, which is 100 exponential moving average, and then comes the 44,775, which is 200 exponential moving average. We have rounding numbers in between at 46,000 that would actually first. The 47,000 is not breached today. That will be the first support. If that's breached, all these things supports will come until 46,000, which is a rounding number again. Right. Let's make it note that the 60% retracement and the 200 exponential moving average is at control. It's a long way, but so most likely tomorrow's support resistance could maximum go down to 46,175, 250 exponential moving average zones. Right. So that's the levels that you can watch out for tomorrow. And let me just get back to summary. You have a negative day of 142 points lost in Nifty, and that's around 0.64, and a flattish 0.16%, or 75 points only down on Bank Nifty. But there's a bear trap on both, and the wide range bearish candles on both. And Nifty, it is a bearish engulfing candle as well. Remember, Nifty had done a 32% move and retraced only 4.5% and 2.5% interim in between. That's not a decent correction yet, but Bank Nifty has corrected and it's on the way to recover from 8.5% retracement of in a 26% rally. Both of them had that W pattern, bullish in nature, double bottoms, and volatility divergence. All that setups is more or less confirmed, but this came in as a surprise when there's a shakeout in the market when profit booking is coming. Intraday, we have seen that it's volatile range bound and that big breakdown in Nifty that has happened. Fyers was sellers yesterday, and they had been sellers since quite so long back. 40 to 50,000 of sell-off has happened recently in the cash market, and the AS were buyers obviously for 4,500 points previous buy. So today's data has not come in. We'll quickly go and refresh and see if the data has come in for the Fyers. For today, no, it hasn't come. So we'll have to assume that there was some big fire buying ahead of tomorrow's Fed minutes. That's supposed to come tonight, right? Probably that's what might have happened. Anyway, the levels we already seen that, but it's highlighted there. We can make a note of that. I'm not repeating that. Momentum has fallen to sideways due to the sharp sell-off in the afternoon that happened in Nifty, but Bank Nifty it remains sideways as it is, but it's taken a slight bend because it is on the verge of getting into the bull zones above RSI 60. The trend indicator relaxation is not turned close tower yet. We'll have to wait for that tomorrow, but it's bullish as of now with weak strength obviously. With rising strength, the trend nothing has happened because it is mostly range bound move and a sudden swift move in the half moon only in the Nifty that we've seen. So trend is remaining there. Momentum obviously it has lost and slipped to sideways once again, or the sideways as it now. The bullishness that we had till yesterday is no longer there. Let us see whether it just bounces back tomorrow or not. DVX is also flattish close, just 1% down. Mostly flattish for the last 3-4 4 days it's 16 and it's making 15.93 today, so gotta be careful. It's above 15, anything could happen. Bollinger Bands are behaving little differently. It's contraction that is seen on the Nifty and expansion that is seen on the Banknifty. So expansion would mean more potential upside seen on the Banknifty. Daily charts, Bollinger Bands. Nifty is contracting and sideways moves expected there. So technically, market has lost momentum. Trend is remaining there. Nifty has not much affected, and Nifty has taken out the consolidation, swing highs, and then price action lower low is also negated. So it's everything is fine except some profit booking that might happen in Nifty, but still it has to cover another. Banknifty has to cover another 1,500 to reach its all-time high, right? To catch up with the market index. Well, eyes will be on that for the coming days. Across sectors, if you see, it was a red day except for the metal FMCG reality, which is shown some green. Overall, if you see the auto pharma and reality has got short-term bullishness, and others, metal, FMCG, and IT is still sideways. There's a mixed bag there. That's the sectoral indices we talk about. Now, industry heavyweights that contribute maximum to the indices, if you see, they are also close to red, except for the ICICI Bank managed to close green. Lions and the ICICI Bank are the two stocks that will remain bullish momentum, and HDFC Bank has TCS, Infi, and Kodak. They are all in the sideways momentum as of now. They're no longer in the bearish zones. HDFC has climbed in the sideways. ITC is the only heavyweight stock that is in the bearish zones as of now. So it remains, yeah. So it's just Reliance and the HDFC Bank. Two of them are in a strong position to lead the rally when the market is at the all-time high. Across sector, you don't see green yet, and you have three of them only. It's mixed bag. Right? It's only three of them that's shown. Three of the sectors that's in the bull zones. More of these may have to join for it to push beyond from here. I feel the Banknifty would have to. That's a sectoral index. US markets are having some retracement showing red, and it's a it had done a big rally and it's an all-time high. It may be consolidating or retracing. I'll be cautious about that. It is another market. Dollar is flat, green at 104. Rupee is weak as usual, near the 83. Crude oil is showing red and 76.7. It's maintaining. Gold is spiking up, not ready to fall after having made the all-time high a few months before. So dips like this that come in can be interesting opportunity in quality stocks in long term for long term in this IP mode, small quantities. Every dip is as far as an investor, as far as a trader is concerned, it's a very crucial zone where it was showing bullish, almost bullish yesterday. That's what I said. Today suddenly it slipped back to sideways. We have to wait. Just have to wait. But is it sideways? No. It can change any time. Tomorrow it will bounce back. It's back to bullish. So you have to stay out until there is a clear direction that comes in, or play the non-direction until then. So direction moves can be done once both the time frames, both the indices, turns direction above RSI 60 on both time frames of the indices. Have to wait for that. Until then, play the non-direction by selling forward teams. Tomorrow's a Nifty weekly expiry that comes in. Expiries can be naturally very volatile. You have to be cautious about that. It's a bearish PCR and a futures high short build-up that has happened today. The range is very wide, 21,500 and 20,500, where the highest put and call writing is seen with a bearish buy. So you can expect the market to move as low as 21,500. It's a range you have to keep in mind when you're selling the teams. So the expiry play right there. So that's it. That's all I have. If you are watching this and not subscribed, please share to your friends and colleagues so that it reaches out to max. Play it safe, and the VIX is still above the 15, very close to 16 and rising. I'm not ready to pull off yet, so there is some fear of heights there. Something is worrying the market. You should be cautious. It's at the very all-time highs, very all-time highs. Hardly any correction is happening in the Nifty, and it is struggling to move up. Be careful, but yeah, if the Banknifty joins the party, then like we thought it may yesterday, if that happens coming days, then it could be a big pre-election move that may be happening. So hold on tight and be patient and play it safe. Protect your capital, manage your risk. Okay, thanks for watching. Happy trading, happy learning, happy investing. Bye bye. Bye.